Tata Motors, talking exclusively to ET Now about the numbers for the quarter gone by, saying that the CV business remains steady. It's been a year of consolidation for the PB business. They also said that the JLR demand will be more resilient versus the mass market, and they do not expect the debt levels to increase from here on. But no doubt the stock is under pressure since the word go. Right now it's trading lower by about 1.4% or so. You have a lot of brokerages actually flagging off that JLR is likely to face a tough year ahead due to US tariffs and increasing competition in Chennai. That's what Jefferies had to say in their note. You also had ICICI Direct that highlighted near-term challenges for JLR due to the tariffs, uncertainty and muted China demand, and they've downgraded the stock to an add from a buy rating. So that's Tata Motors for you. But let's bring on board our guests for today. We have Kunal Bothra as well as Shrikant Chauhan joining us. Very good afternoon, gentlemen. Thank you so much for joining us. And Kunal, let me first up take your view on Tata Motors, because this one has had a pretty rough ride. When you talk about the entire auto pack, Tata Motors has not fared well at all. The fact that there was some hope in between when you had the auto tariff and some relief coming in for the auto tariff, but that doesn't seem to be boding well either.
Yeah, it's not performing as per the projected expectations for many of the auto stocks, because generally when you see a market rallying up 10%, you somehow expect that the auto stocks also manage to have a fair share of the price rally. But then I would believe that at current levels of 700, sub 700 for Tata Motors, the stock, when we look at the last 3 months and 6 months of charts, it indicates that the stock has gone through that process, or a hard process of a price correction, then a time-wise correction. Maybe not at 700, but I think if the stock dips down to say 650, 670 kind of a zone, that could actually be a zone where traders could look at buying or accumulating the stock. Because my sense is that even if there is any kind of a further mean reversion or a continuation of uptrend for Tata Motors on a short-term play, we could be looking at 725 to 750 as a potential target range for the stock.
Right, so that's the view coming in on Tata Motors. Good afternoon, Shrikant. And if you look at the markets, we are in a consolidatory phase. That's what it looks like, given the fact the way how the markets fared yesterday. Today, we are just seeing muted moves when you talk about the benchmark indices. What should one prepare themselves for?
Yeah, good evening, everyone. I think, Nifty is definitely going to consolidate. It is going to spend some time within the broader range of 25,000 and 24,500 on the downside. The reason is because we saw substantial rally of 1,000 points in just 2 or 3 trading sessions from the lows of 24,930 to almost 25,000. And maybe that's the reason we may see some more consolidation within the range. The strategy should be to buy on dips. Ideal levels are 24,500, 24,400 to buy for. And in case if we see the market is bouncing back to 24,800 levels in the near term, I mean to say next 1 or 2 days of time, then there we should look for creating short positions with a stop loss at 25,000. So I think this should be the range which we need to follow, and we need to focus more on mid cap and small size companies to take any specific trade in this market.
There are those buzzers, definitely. Look at the defense stocks, for instance. They've had a relentless move. HAL, that stock is holding higher by almost about 3%, even though the numbers were weak. The revenue was down 7%, margins at 39%. But an unabated move coming in for that stock, although it did have that little bit of a knee-jerk reaction as the numbers came in. But not just that, several defense stocks are buzzing. Look at a Cochin Shipyard that's higher by 11%, Midhani up 10%, Bharat Dynamics, Mazgaon Dock. All of these stocks are holding out very, very smartly in trade. Excuse me. We've also got Varun Goyal from Mirae Asset Investment Managers joining in on the show right now. Varun, hi, afternoon. Good to have you on ET Now. Just wanted to understand, what's the market mood right now? Does it seem like this is all the good news that one could get? Does it seem like we're hitting some sort of a peak?
Good afternoon, Aisha. Thank you so much for having me on the show. I think broadly, if you look at the Q4 earnings have been more or less in line with expectations. I think based on the significant fiscal stimulus and the monetary easing that has been carried out by the RBI, we would expect a cyclical uptick in the Indian economy in the next, I think, a year or so. So our sense is, while this year FY25 earnings growth have been very muted, FY25 should see low to mid double-digit kind of earnings growth coming back from Nifty 50. So broadly, our sense is India is in the midst of a cyclical uptick. if you look at the global factors, I think a lot of noise about trade war and tariffs seems to be subsiding, and I think we are going back slowly to a much more normal kind of a trade environment. And I think if you combine it with the stability in the geopolitical situation, I think broadly things seem to be working out well from a macroeconomic perspective. So our sense is financial year 26 should see a decent earnings growth trajectory, and the market should reflect that going forward.
Right. Okay. That's the take coming in at the market right now. Having said that, Varun, the defense names, just anything and everything is moving up unabated. But do you feel that right now it's more of a sentimental move or a knee-jerk reaction post the ceasefire on the LOC? But these stocks are expensive. If you've not already invested, maybe right now is not a good time to put in fresh money to work.
But I think if you look at defense as a theme, there is no doubt that we are going to be moving more and more towards indigenous production of defense products across all three armed forces. So incrementally, the order book is going to increase for most of these companies. I agree that the valuation is a challenge in most of these names. So our view is that selectively, as in when there are opportunities during periods of market correction, one is able to get these names at the attractive price, one should definitely have some exposure. Considering the fact that we believe in the next 2 years we should see significant increase in order inflow, and these stocks typically react more to order inflow rather than earnings. So I think from that point of view, the outlook going forward should be strong.
Good afternoon, Varun. This is Shell also joining in the conversation. Just wanted to get your views then on the hospitality and the tourism space as a whole, because along with defense, you saw all of these counters also see sort of a volatile move over the last few trading sessions. How should one actually try and play this theme? Because it's had a good, at least first 4 months of the year 2025.
Yeah, so our view on travel, tourism, hospitality space is quite positive. I think the Indian middle class has been spending a lot on traveling. I think there is clearly a lack of supply as far as hotel rooms are concerned, at least for 2 more years. When the supply is coming in, it will take another 2-3 years to catch up with demand. So we expect the hotel room rates to remain firm. I think if you look at air traffic, that has also been growing in a good double-digit kind of a number for the last several years, and we expect those trends to continue. So I think combined, if you combine these three things, propensity of the middle class to spend more and the supply constraints in the space, our view is that travel, tourism, hospitality, and even ancillary sectors, like luggage and all, should continue to do well.
Right. Okay. Let's just take some closing ideas as well on that note. Kunal, what's on your list?
So in terms of closing idea, look at ONGC. That's a stock which is starting to look attractive, and I think at current levels of 240 thereabouts, the stock is also completing a bullish flag formation. So would expect the stock to break out over the next couple of days. Would suggest a target closer to 250, 255 plus for ONGC.
Okay, Shrikant, what's looking good to you for trade right now?
Yeah. See, as I said, I would like to go with mid-size or small-size companies where we can see some technical breakouts and they can participate with the overall momentum of the market. And there are like high beta stocks. So in that specifically, we like Ramco Cement, which is currently around 992, 993. There I'm of the view that the stock is forming some bullish consolidation formation and it is on the verge of breakout. So the next level to watch out for would be 1060, and we can keep a stop loss at 975 for creating any long trade on Ramco Cement. The other stock which we like is IRFC, which is currently trading at 129, 130 sort of levels. From here again, based on its technical formation, I'm expecting stock to move towards 137, and we can keep a stop loss at 124 for the same.
All right, so those are some of the closing ideas coming in from our experts. But on that note, we slip into a break on this edition of Closing Trades. When we come back, last half hour of the trading session. Don't go anywhere.
We're still pretty quiet in trade, but must quickly mark what's happening within the global markets. So firstly, Asia and how they've shut shop in trade. Although the handover from the US equity markets was fabulous when we came into trade, you had the S&P, which is now in the positive for this year so far. But Japan has closed in mildly soft, while our markets are just lying quiet right there. Hong Kong today has had a massive move. It's an over 500-point move that HSI saw, and it was a solid 1% up in the green for Shanghai as well. But unfortunately, that's not the sentiment that you're seeing across the European market. Stock 600 down 0.5%, 160 point off a knockoff coming in for the DAX, mildly soft for the FTSE. The CAC is well lower by about almost 1% or so as we speak right now. So we're pretty much there in the middle, not following what's happening with China and the Hong Kong region, nor are we falling like the European markets are. But what about US futures before I move forward? The pre-market rates right now are indicating a very flattish move. You've got the Nasdaq flat, S&P flat, and absolutely flat for the Dow futures, though early days still. That said, while the defense names are holding out, so are metal names. Tata Steel is also one stock which is holding out very, very smartly in trade. Of course, it came out with its earnings. The stock is holding up a good 4%. They were looking at an 11,500 crore rupees of a cost reduction plan in FY26. The management also spoke with us just yesterday, and they did talk about as to how UK could break even or start making profits this year itself. Netherlands profitability is going to sustain, and India demand is strong. In fact, we should try and bring up that bite as well from Tata Steel management. And also they were talking about as to how deleveraging is only going to accelerate further. But Varun, what is your own sense on how the metals pack is behaving today? It seems more like a reprieve on all the tariff tensions between US and China.
Yeah, I think there's a lot of concern on global growth during the last few months because of concerns about the impact of tariffs on US economic growth. I think as some of those conditions, those concerns get relieved, we are seeing better earning forecast for Indian metal companies. If you look at the stimulus that has been given in China, there is also hope that the Chinese economy should also stabilize. And I think if we combine it with some of these protective measures that Indian government has imposed, especially for steel, we expect that sector should continue to do well. We expect a revival in earnings growth for the steel space in particular for FY26.
So that's the take coming here on Tata Steel. Remember, we spoke to the management also post their earnings, the MD and CEO TV Narendran, on what lies ahead in terms of volumes and strategy in order to reduce the debt in the quarters to come. Let's hear out what he had to say.
The demand is quite resilient in India, and at least as far as Tata Steel is concerned, we've never really had to export much even in the past, and we don't need to do it today because we have very strong equity with our customers. We have a very strong distribution network. So I think we are very comfortable that any additional volume that we bring in, we will be able to sell in the domestic market. So this year we will have at least 1.5 million tons more to sell in India than we did last year because the Kalinganagar plant is ramping up. But we have a blast furnace relining in Jamshedpur, so that takes out some of the volumes. But net, we should have at least 1.5 million tons more to sell this year than last year in India. The net debt in end September, when we announced our results, was 88,000 crores. We've brought it down to 82,000 crores, 6,000 crores in the last 6 months. We expect it to go down further during this year as we get the additional volumes and if the margins stabilize at this levels or gets better. So I'm not giving you a specific number, but certainly we will see deleveraging happen more during this year.
Okay, that's the management of Tata Steel, but there are the defense stocks which are really flying high. So let me welcome on board Kanishka and figure out what exactly is aiding the sentiment here.
Absolutely. Against the backdrop of India-Pak border tensions, defense sector stocks have been in focus and have been rallying for the past few days. In fact, in today's trade alone, major defense stocks like Bharat Forge, HAL, BEL, BDL and Mazagon Dock as well surged anywhere between 2 and 7%. Garden Reach Shipbuilders, on the other hand, soared 11%, driven by strong Q4 results. On the other hand, HAL did not report a very strong set of numbers, yet the stock has been rallying. Now, looking at the broader trend, these stocks have gained anywhere between 10 and 30% since the Pahalgam attack on April 22nd as geopolitical tensions continue on that front. Now, if you look at what's fueling this kind of rally in defense stocks, let's first take a look. Now, the recent operations like the operation Operation Sindoor, it has showcased the strength of made in India weaponry. And on the back of this, experts say that Indian defense companies are expected to see a rise in their order books, not just from domestic, not just on the domestic front, but also on the global front, both from big and small countries. Apart from that, India's shipbuilding sector in particular is poised for significant uptick in orders. Now, analysts say that this could trigger a re-rating in companies of the defense sector. Adding to this trend, the supportive trend is also official data that India's Defence Ministry's order book has now touched a record high of 2.1 lakh crore in FY25. Now, looking ahead, the government is, it currently allocates 1.9% of the GDP to defence spending, but going forward, it looks to take that number to 4% of the GDP, which also acts as a supportive news for the defence sector.
Right, so that's the take coming in on the defense space. Thank you so much for that, Kanishka, for getting us the update, what's exactly happening in that one particular category. And given the fact that there's been a lot of a lot of movement in the entire defense space. Kunal, right now, do you think it's the right time to venture into the defense space?
Yeah, I think so. In fact, BEL is something which we recommended some time back. I think even at current levels of 330 thereabouts, I would still believe that the stock looks fairly attractive. HAL has managed to give a breakout. Hindustan Aeronautics, that's a stock which I think at 4,600 plus levels is confirming a breakout of a bullish flag formation. You've seen GRSE, Cochin Shipyard. I think specifically these stocks have given a gap up move. So maybe over the next couple of days after this fierce kind of a gap up of 10% plus for GRSE, you might probably expect the stock to get into a mild correction, but that should be taken as a good buying opportunity. So rarely do we see that these kind of stocks, they get into a very coherent kind of a breakout where you see most of the stocks starting to look attractive. In fact, over the last 3-6 months, we've actually seen BEL as well as Mazagon Dock emerge as strong leaders from the large cap and the mid cap category into the entire defense pack, and then it was followed by other stocks which started to look attractive. So my sense is that the sector looks fairly positive, would be bullish on the entire space, and would recommend a buy even at current levels as well as on dips.
Okay, still got some steam left. That's the take coming in on the defense names right now. But Varun, help us understand where in the current market are your long biases and where is it that you have an avoid or underperform?
I think currently we remain quite positive on the banking and the financial services space. I think clearly the rate cut by RBI will definitely help from a growth point of view. I think we've already seen 50 basis points of rate cut. We would expect another 50 basis points of rate cut in the next 3 to 6 months. I think along with it, the significant easing and liquidity is definitely helping the system. I think some of the rate sensitive sectors, especially if you look at the real estate space, that is one of the sectors that has seen a very deep correction. We believe 100 basis points of rate cut will definitely ease a lot of pressure as far as EMI payments are concerned. So that sector should definitely benefit. We believe we are still in the middle of the real estate cycle. I think select capital goods stocks also have been seeing quite a bit of correction in the last 6 months. So while some stocks have become significantly overvalued, but I think there are definitely pockets of opportunity, and we are definitely selectively looking at some of those names. In addition to that, we believe consumption as a space is ripe for a comeback. I think after 2-3 years of underperformance, I think if we have a good monsoon as is projected, along with rural recovery, which is expected to play out in the next 6 to 12 months. And next year, we would have a big pay commission impact also. So I think for the next 1 to 2 years, we should see a significant earnings recovery as far as the whole consumer discretionary and consumer staple space is concerned. So these are some of the spaces that we are constructive on at this point of time.
Right. Varun, what's your view actually on the traditional IT space, given the fact that now you have some sort of hopes or the views coming from a lot of brokerages that the odds of a recession in the United States has now reduced. Do you think, keeping that in mind and what all has transpired over the last 4 months, when you talk about the way how the US markets have been faring, also the tariff talks, do you think you can now actually look at betting on the IT space, or it's an avoid?
No, I think the correction that we've seen in the last month or two has given good opportunity to increase exposure to the IT sector. And I know we've also been selectively adding to our IT exposure. Our sense is that if we look at the current tariff scenario, and of course it's impossible to predict how it will eventually play out, but if the US is are not going to have a big recession or a big economic slowdown. I think most of these IT companies are trading at 10-year average valuations or below that. And if the growth surprises on the upside, there could be a significant entry opportunity as far as the IT space is concerned. So we are definitely looking at IT space with a positive outlook for the next financial year.
Okay, Varun, stay with us. We'll come to you and Shrikant and Kunal as well. But I want to quickly take it across to Ashesha and find out what exactly mutual funds have been up to in the month of April, what have been the sells and what have been the big buys. Ashesha, what's the finding?
Well, yes, so Nuvama Research has come out with a very interesting report of the stocks they bought, mutual fund industry bought and sold in the month of April. First up, let's talk about large caps, where mutual fund industry bought the most in Reliance Industries, Axis Bank, Kotak Mahindra Bank, and on the flip side, ITC, Bharti Airtel, Bharat Electronics were some of the other stocks where the mutual fund industry sold in the month of May. This, of course, is for the month of May. SBI and HDFC Life are also in the buy list, while HUL from the FMCG sector and Infosys from the IT sector were some of the other stocks where the mutual fund industry reduced their positions in the month of April. Shifting focus to the mid-cap industry or mid-cap sector then, a whole host of stocks over here as well. Lupin, Coforge, Colgate were added by the mutual funds in the month of April, while Voltas, Max Healthcare, Paytm were some of the stocks which they sold in the month of April. In fact, we'll have some more stocks, InfoEdge and M&M on the sell side, PI Industries and Persistent Systems from the IT sector on the buy side. Let's also shift focus to the broader markets and talk about the small cap index then. We had BSE, NBCC, Cyient which were added by the mutual fund industry. Amber Enterprises, Nalcor, National Aluminium from the metal segment, Blue Star were some of the stocks where they sold out of. 361 and Galaxy Surfactants were also some of the other stocks. Ujjivan Small Finance Bank and Apar Industries are where they added their positions in. So across the sector, several stocks which have been added by and several stocks where they've reduced their position in the month of April.
All right, thank you so much for that, Ashesha, for outlining the MF activity in the month of April. Shrikant, let me come to you and let me quickly get your view on the entire auto space, because yes, you have most of the majors that have already come out with their numbers. We are expecting numbers coming in from Eicher Motors, that's from the two-wheeler space. But what's your take on the auto space?
If we see this particular Nifty Auto Index and the recent activity in two-wheelers as well as four-wheelers, I am of the view that this sector is gaining momentum and we could see some more activity, at least in the near term. Even if we go through with its entire Nifty Auto Index, then it is into bouncing back mode and it is going to retrace its entire sell-off by at least 60-65%. Broadly, I am of the view that we should look for adding stocks like Mahindra and Mahindra as well as Tata Motors and TVS Motors to our positional portfolio. For Mahindra and Mahindra, we are of the view that it is heading for the levels of 3,500. Currently, it is at 3,100 levels. For Tata Motors, I think the stock has made a bottom close to 660, 650 levels. And again, if we take a positional view, then I am of the view that the stock is heading for at least 800, 825 sort of levels based on its technical formation. The other stock on which we discuss is TVS Motors, and there also if we see, then it is forming some continuation formation, and based on that the stock can move to the levels of at least 3,000 sort of level. So we are specifically bullish on these 2-3 stocks.
All right, so that's the take coming in on the entire auto space. Thank you so much for that, Shrikant, and for being part of the show. But let me come to you, Varun, and let me get your view actually on the auto space in particular. What's your take coming in on this one? And how should one gauge the entire space, given the fact that, yes, the sales have been a cause of worry of late, but then you have good monsoon that could augur well for the tractor players. Also, you have the tax cut and the rate cut, interest rate cut cycle also that is at play. So a lot of factors that could be at play for the auto space. How should one actually gauge it?
We continue to be positive on the tractor space. As you said, we're expecting good monsoon and a strong rural recovery. So that is clearly a space which stands out. I think last year the volume numbers were fairly muted. So we are beginning to see a cyclical recovery and started in the March quarter, and we hope that it will continue going forward. I think the other larger trend is people moving from hatchbacks to utility vehicles, and those companies which have their portfolio geared towards that will continue to benefit. So that's a space that we like in the auto. CV space, I think, continues to be in the midst of a cyclical downturn. I think we are still 2 quarters away from a big recovery. So as such, we remain cautious on that space. I think two-wheelers, again, in the short term, it looks like sales have been a little muted. I think only premium motorcycles and EVs, those companies which have good portfolios on that side, should continue to do well.
Steady exports and domestic sales are set to drive Eicher Motors' numbers in the Q4 performance. Shrishti is here to tell us what the ET Now poll is penciling in.
Well, this time around, when it comes to Eicher Motors' earnings, the Royal Enfield volumes have been quite encouraging. Almost a 24% jump on a YOY basis is what we have seen, and the exports volume were quite encouraging. When it comes to the average selling price, therein on a sequential basis, there has been a marginal uptick as the benefits from the better export mix and the price hikes are likely to be offset by any adverse impact on the domestic mix as well. When it comes to the numbers, then, firstly on the consolidated margin, we are expecting a jump of 25%. This is the EBITDA margin on a consolidated basis is what we are expecting. The revenue expected at 5,190 crores. EBITDA expected to see a jump of 15%. And lastly, on the profit figure, 1,265 crores is what we are penciling in. And look at also for the Royal Enfield margins as well, because this time around 25.5% is what we are penciling in. But well, of course, the demand outlook shared by the management commentary. Other than that, how are they looking at some of the new launches that are lying ahead? We will wait by to get more details within the management commentary when it comes to the earnings. Back to you.
Right, Shrishti, we'll leave it at that. That's what we can expect from Eicher Motors when it delivers its numbers. Just taking stock of what else is happening in the market. While sure, metals is that one trade which is holding up, and so is defense. But other than that, you've got an NBCC which is looking good. There's AB Capital which is also holding up. And yeah, most of these are, earnings reactions. Banks, of course, are taking a bit of a backseat, be it AU Small Finance Bank, or Kotak, HDFC, or for that matter, an ICICI Bank as well. But then there are a segment of stocks which are also holding at their all-time high. Look at an Aster DM, look at a JK Cement, look what's happening at a CEAT as well. These are segments in the market which are looking very, very smart indeed. Other than that, of course, IT continues to be one of those beleaguered pockets. But having said that, today you are seeing a little bit of a bounce play out for IT. But Kunal, is it seeming like sustainable? Because IT is really having one of those very, very volatile moves, right? One up day, one down day.
Yeah, but it should sustain. In fact, when you look at this in the entirety, when you look at this over the last 1 month of price uptake, the underperformance of the sector with respect to many of the other performing sectors, and then looking at the individual charts for many of these names, it's not as if that these stocks have run up exceedingly high. There have been intermittent pauses into these stocks in the last 1 month when these stocks have carried on to the uptrend. And there have been phases when these stocks, I think for at least 2 or 3 weeks, had remained absolutely sideways in a span, I think in a range of just about 3% to 4% individually. So that itself indicates that these stocks have that have their trend intact, and with these stocks confirming breakout the 50-day moving averages, the supports have risen up higher for these IT stocks. So my sense is that many of these IT names, they would continue to move up higher. You might have few of the stocks which could probably drag down, maybe come back to their respective 50 DMAs. But when you look at this over the span of the next 2-3 weeks or so, I would believe that there should be a significant upside further.
All right, so that's the take coming in on the IT space. So Kunal, let me get your BTST ideas.
So there will be 2 buy calls. The first one is one Emphasis. That's a stock which from the mid-cap IT names is actually forming a classic inverted head and shoulder pattern, and the stock is on the verge of a breakout. So would look out for targets in the range of 2650, stop loss at 2500. And Bharat Forge is something which is starting to look very attractive. The stock is going into a V-shaped recovery, and at 1240-50 levels thereabout would suggest a buy with a target of 1320, stop loss at 1200.
Right, so that's the BTST ideas coming in from Kunal for all of our viewers. But Varun, let me get your views then. When you talk about the entire broader market, when you compare it to the benchmark indices, the view right now is that given the fact that the broader markets have had much more of a sharper fall, the chance of bounce back for this entire space is much more, and most likely for the rest of the year, they may likely outperform the benchmarks. Are you of the camp that now you can actually take the shift away from the large cap players and look at some quality mid cap players which have actually corrected sharply and have more scope for an upside based on fundamentals?
Yeah, absolutely. I think some of the small and the mid-cap names, if you look at sectors like non-lending financials, so basically your whole financial savings theme, asset management companies, brokerages, insurance companies, depositories, exchanges. This was, of course, a segment which is fast growing and was very richly valued. They corrected 30, 40, 50% from the peak. I think the earnings growth should roll down to that space, should continue to do well. Similarly, in select capital goods and real estate, mid and small cap ideas, I think some stocks have corrected as much as 50, 60%. And while the earnings cut may be there, but maybe not to the same extent. So I think definitely scope for bottom-up stock picking opportunities in some of these states where we believe earnings growth will remain strong for the next 2 to 3 years.
Right, so that's the take coming in on some of those counters. You have some flashes on the bottom of the screen is coming in from the Bharti Airtel con call, where they're saying they are looking to eliminate subsidies in the DTH business. They're saying the order book in the whole sales services and B2B segment is facing pressure. Also, what the management is saying that the order book in core connectivity and digital services in B2B is good. Remember, Bharti Airtel came out with these numbers yesterday. Today, the stock is reacting to that. They are also mentioning the fact that they're not pleased with their low share in the data centers business. As you can see, the stock has actually cooled off from the elevated levels. But on the charts, Kunal, how is Bharti Airtel looking to you when you compare it with the Vodafone Idea?
Of course, Bharti Airtel stands apart. I think over the last 2-3 years, it's been a futile comparison, frankly, because Bharti Airtel has moved in its own trajectory. I think from 1,000-1,200 levels, the stock moving towards 1,800-1,900 kind of a range. And that too, I think at a point, the best part was in the last 8-9 months when the markets were extremely choppy and volatile. Even in that time frame, Bharti Airtel managed to stand its ground and then perform exceptionally high. And when the markets start to get into a recovery from March, April, that's where Bharti Airtel managed to find additional momentum. So that's a very rare kind of a quality that stocks, they generally tend to outperform when it comes back, when the markets have become very volatile, and then they stand to gain momentum further when the markets have recovered. So I think that's a very rare quality for Bharti Airtel. Vodafone Idea, the stock is still plagued with a lot of news flow, and I think if I'm not wrong, it's trading close to 7.2 kind of a range. Recently also, I think we saw the stock coming back towards 8.5 to 9 kind of a level, but it was met with a lot of selling as well as resistances. So we need a decisive breakout to happen for Vodafone Idea. Till the time I think that happens, it's better to concentrate on the performers in that category. It stands out Bharti Airtel.
Varun, you think within the listed pool and given how capex heavy the sector is, you think Bharti will maintain its leadership?
I think as far as telecom space is concerned, we continue to see increased potential for profitability, considering the fact that only 3 players are left. So I think ARPU will continue to increase in the next 2 to 3 years. In fact, we would expect one more price hike sometime in this financial year, followed by one more in the subsequent year, and that should cumulatively take up the ARPUs by 20 to 25% over a 2-year period. So as such, the profitability of the sector should remain quite positive. And we expect the telecom companies to continue to do well.
Okay, that's coming in on telecom. Varun, we'll let you go on that note. Thanks for your time. In fact, Kunal, thank you as well for joining in today. And I'm going to hand it over to Snehi for the closing trades.
Well, yes, let's take a look at what today's trading session has panned out to be for us. And it's been completely flat, if you could call it that. Not much happening on the Nifty, although towards the last 30 minutes or so of trade, we've seen a little bit of an uptick coming in on Nifty. And we're close to closing 0.4% higher on the Nifty, 24,684. Although it doesn't look like we might be crossing the 24,700 mark. Remember, we're still almost 75 to 100 points lower from the day's highest point, but we've seen meaningful recovery from the day's low as well. So looking good for the Nifty, and well, that ends well. So we're looking at about a 0.5% gain coming in
for the Nifty right now. Sensex has underperformed the Nifty today nominally, but not much to worry about because the 0.3% uptick is what we've seen on the Sensex as well. But missing that 81,500 mark is going to be the Sensex in today's trading session. What has not done well and has taken a tumble in today's trade is Nifty Bank. It's the top sectoral loser as well. It's a 0.1% cut coming in. At one point it was lower by almost 0.5%, so meaningful recovery from the day's lowest point coming in for Nifty Bank as well, and 54,882, so short of the 55,000 mark on Nifty Bank today as well. Advance decline ratio steeply in the favor of the advances today. On the back of that, we've seen India Wix also simmer down quite significantly in today's trading session, and India Wix is also a metric that looked good. In fact, a 5.5% cut coming in. We're very close to slipping below the 17 mark as well, so looking very good on India Wix also today. Let's pull up the broader markets and see what kind of moves we've seen from there, because the real show of strength has come from the broader markets in today's trading session. Nifty mid-cap up 1.2%. The small cap index has once again beaten the overall market, and almost a 1.5% uptick coming in on the Nifty small cap index today. So looking very good on this front as well. Sectorally, let's take a look at what's done well and what's not. Nifty Metal continues to shine in today's trading session, looking very good. A 1.5% uptick coming in on Nifty Metal. You had names like SAIL, NALCO, Hind Copper, NMDC, Tata Steel, Jindal Steel that all did very well today, and all of these stocks which I just mentioned are trading with gains of more than 4% today, or around 4%. So looking very good for all of these names in today's trade. Followed by metal, you had realty, energy, IT, media, auto, pharma, PSU banks. It was the FMCG index that has made a very smart, quick recovery onto the green once again from the red. So last couple of minutes of trade, FMCG has tilted over. It looks like Nifty Bank may also tilt over to the green, but well, that looks a little shaky right now. Nifty FMCG on the flat line with a slight hint of a positive bias coming in. So those were the sectors to talk about, and let's talk about some stocks today. Garden Reach, Cochin Shipyard, Mascot, all of these defense stocks once again in focus. Very stellar moves coming in. Garden Reach, in fact, up 15.5%. You also had good set of numbers coming in from Garden Reach, but other than that, the entire defense sentiment that's playing around, all of these stocks are doing very well in today's trading session. You had Zydus Life and Aurobindo Pharma, positive news flow coming in from both of those companies, but both of those stocks were under slight pressure in today's trading session. Zydus Life has managed to tilt over to the green now. We don't know if we can say, no, we can't say the same for Aurobindo Pharma, because that still continues to be in the red. So 2.5% cut coming in on Aurobindo Pharma right now. Asian Paints, what we understand from Economic Times sources early in the morning today is that Reliance is looking to revive their plan of selling 4.9% stake in Asian Paints. On the back of that, Asian Paints was in deep pressure today, one of the top Nifty losers in fact in today's trade. 1.5% cut coming in on Asian Paints in today's trading session as well. Lastly, Adani Green to watch out for. Adani Renewables has inked a new power project in Kevra, Gujarat, so positive news flow coming over there. Other than that, you had RITES, lots of other stocks that were earning, Edelweiss and other stocks that were earnings candidates in today's trading session. But this is how we're summing up for the market today. A 0.4% uptick coming in on the Nifty. It looks like we have ended sub the 24,700 marks. We'll give the rate some time to settle, but that's how we're wrapping up for the day.